Welcome back to Drowsy Tales Daily. Tonight I have 33 incredible stories from Reddit about insurance company frauds and claim denials where trusted insurance agents, claims adjusters, and company executives deliberately betrayed policyholder trust through fraudulent claim denials, premium manipulation, coverage deception, and benefit theft that turned essential financial protection into devastating financial betrayal and violated consumer protection standards. Our first story takes us to Midwest Family Insurance, where claims adjuster Jennifer had been processing home insurance claims for 6 years. She was considered reliable by management, consistently closing cases quickly and keeping claim payouts within company targets. Jennifer seemed professional and thorough in her documentation. Jennifer handles our most complex property damage cases, praised claims manager Robert during her annual review. Her attention to detail and quick resolution times are impressive. But policyholders started questioning why their legitimate claims were being denied with explanations that didn't match their actual damage or policy coverage. My roof was destroyed by hail, but they're saying it was pre-existing wear and tear, explained frustrated homeowner Michael to his insurance agent. The damage happened during the storm last Tuesday night. When Robert investigated these troubling denial patterns, he discovered Jennifer had been fabricating evidence to deny valid claims. She'd been altering digital photographs of damage, changing timestamps on weather reports, and creating false inspection reports claiming pre-existing conditions that never existed. Jennifer had been photoshopping images to remove hail damage, adding fake rust or wear patterns to make storm damage appear old, and backdating maintenance records to suggest homeowners had been negligent. The scheme was particularly cruel because it targeted families during disasters when they needed insurance protection most desperately. Jennifer had been meeting company goals for low claim payouts while homeowners faced financial ruin from disasters their policies should have covered. When investigators examined her case files, they found evidence Jennifer had fraudulently denied over 200 legitimate claims worth nearly $3 million while policyholders were forced to pay out of pocket for covered damages or abandon their homes entirely. Our second story comes from Safeguard Auto Insurance, where Agent Marcus had been selling policies and handling customer service for 5 years. He consistently met sales targets while maintaining high customer satisfaction ratings through his friendly, helpful demeanor. Marcus seemed genuinely concerned about helping families get affordable coverage. Marcus is our top agent for customer retention and policy renewals, announced Regional Manager Linda during the quarterly meeting. His clients trust him completely and rarely shop around for other coverage. But customers started receiving premium increase notices that didn't match what Marcus had promised when they signed their policies. He told me my rate would stay the same for 2 years if I paid annually, explained confused policyholder Sarah to the customer service department. But now they're saying I owe an additional $800 or my coverage will be canceled. Linda decided to investigate these unexpected premium changes that seemed to contradict written policy agreements and company pricing structures. What she discovered was premium manipulation fraud that trapped customers in unaffordable policies. Marcus had been quoting artificially low premiums to win new customers, then submitting different, higher premium amounts to the company's billing system after policies were signed. He'd been showing customers fake rate cards with discounted prices while actually enrolling them in expensive coverage they couldn't afford but felt committed to keep. The scheme particularly targeted elderly customers and young families who shopped carefully for affordable coverage but trusted Marcus to provide accurate pricing information. Marcus had been collecting bonuses for high-value policy sales while customers discovered they'd been deceived only after their budgets were already strained by unexpected insurance costs. When authorities investigated his sales practices, they found evidence Marcus had been overcharging customers for 3 years while collecting over $60,000 in fraudulent commissions from policies that should have been canceled for deceptive pricing practices. Our third story involves Trust First Health Insurance, where medical reviewer Dr. Patricia had been evaluating treatment authorization requests for 4 years. She consistently processed high volumes of prior authorization decisions while maintaining approval rates that satisfied company cost control objectives. Dr. Patricia seemed knowledgeable about medical standards and insurance protocols. Dr. Patricia's reviews ensure we approve medically necessary treatments while controlling unnecessary healthcare costs, praised Medical Director Dr. James during a department meeting. Her clinical expertise helps us make sound coverage decisions. But doctors started questioning why their patients' clearly medically necessary treatments were being denied with explanations that contradicted established medical guidelines and treatment standards. They denied chemotherapy for my cancer patient, claiming it's experimental, explained frustrated oncologist Dr. Michael to the insurance company's appeals department. But this is standard first-line treatment that every medical guideline recommends. Dr. James launched an investigation into denial patterns that seemed inconsistent with evidence-based medical practice and company policy guidelines. What he discovered was medical necessity fraud that endangered patients' health and lives. Dr. Patricia had been deliberately misrepresenting medical research and treatment guidelines to deny expensive but necessary medical treatments that insurance policies clearly covered. She'd been citing outdated studies, misquoting medical literature, and creating false medical justifications to deny treatments like cancer therapy, cardiac procedures, and emergency surgeries that doctors prescribed to save patients' lives. The scheme was particularly dangerous because it delayed critical medical care while patients' conditions worsened during unnecessary appeals processes. Dr. Patricia had been meeting company cost reduction targets while patients suffered complications from delayed treatment or paid enormous out-of-pocket costs for care their insurance should have covered. When medical authorities investigated her authorization decisions, they found evidence Dr. Patricia had fraudulently denied medically necessary treatments worth over $5 million while patients faced medical bankruptcy or died from delayed care that could have saved their lives. Our fourth story takes us to Secure Life Disability Insurance, where claims examiner David had been reviewing disability benefit applications for 7 years. He consistently processed applications efficiently while maintaining denial rates that kept company benefit payouts within acceptable ranges. David seemed thorough and objective in his claim evaluations. David's disability assessments are comprehensive and well-documented, praised claims supervisor Janet during his performance review. His medical knowledge helps us make accurate determinations about work capacity and benefit eligibility. But disability applicants started questioning why their claims were being denied despite clear medical evidence of conditions that prevented them from working. They're saying my multiple sclerosis doesn't prevent me from doing my job as a construction worker, explained confused claimant Robert to his attorney. But my neurologist says I can barely walk and my hands shake too much to operate equipment safely. Janet decided to investigate these questionable denial decisions that seemed to ignore obvious medical evidence and functional limitations. What she discovered was disability fraud that destroyed families' financial security during medical crises. David had been systematically ignoring medical evidence and fabricating functional capacity assessments to deny legitimate disability claims from people who couldn't work due to serious medical conditions. He'd been mischaracterizing doctors' reports, claiming patients could perform job functions their medical records clearly indicated they couldn't manage, and creating false surveillance reports suggesting disabled claimants were more functional than their conditions actually allowed. The scheme particularly harmed families who had paid disability insurance premiums for years expecting coverage when illness or injury prevented them from earning income. David had been meeting company targets for low benefit payouts while disabled workers lost their homes, couldn't afford medical treatment, and faced financial ruin during health crises. When investigators examined his claim files, they found evidence David had fraudulently denied over 400 legitimate disability claims worth nearly $8 million, while families struggled with poverty and untreated medical conditions that proper benefits could have addressed. Our fifth story involves Premier Property Insurance, where Inspector Lisa had been conducting property damage assessments for home and business insurance claims for 5 years. She consistently completed inspections quickly while providing detailed reports that supported company claim decisions. Lisa seemed professional and knowledgeable about construction and property damage evaluation. Lisa's inspection reports are thorough and help us process claims accurately, announced Inspection Manager Carol during a team meeting. Her expertise in property damage assessment ensures we pay appropriate amounts for legitimate repairs. But contractors and policyholders started questioning why Lisa's damage assessments consistently underestimated repair costs and minimized obvious property damage that required extensive repairs. She's saying the water damage only affected the surface flooring, explained frustrated contractor Mike to the insurance company. But I can see the subfloor is completely rotted and the wall framing is damaged from moisture that's been there for weeks. Carol launched an investigation into assessment practices that seemed inconsistent with standard property damage evaluation and contractor estimates. What she discovered was property damage fraud that left families with unrepaired homes and financial losses. Lisa had been deliberately underestimating property damage to reduce claim payouts while collecting kickbacks from preferred contractors who would provide low-cost repairs that didn't address underlying damage properly. She'd been photographing damage from angles that minimized its appearance, failing to document hidden damage that required extensive repairs, and creating false assessment reports that understated the scope of necessary restoration work. The scheme particularly harmed families whose homes suffered extensive damage that Lisa's reports didn't acknowledge, leaving them with inadequate funds for proper repairs that would prevent future problems like mold growth and structural deterioration. Lisa had been meeting company cost control objectives while homeowners faced ongoing property damage that affected their family's health and safety. When authorities investigated her inspection practices, they found evidence Lisa had underestimated property damage by over $2 million while accepting kickbacks from contractors who provided substandard repairs that left homes unsafe and uninhabitable. Our sixth story comes from Guardian Life Insurance, where policy administrator Michelle had been managing life insurance policies and beneficiary claims for 6 years. She consistently processed policy changes and death benefit claims while maintaining accurate records that satisfied company audit requirements. Michelle seemed organized and sympathetic when helping families during difficult times. Michelle handles our most sensitive beneficiary claims with compassion and professionalism, praised Administration Manager Stephen during her evaluation. Her attention to detail ensures families receive benefits they're entitled to during their time of grief. But beneficiaries started questioning why their life insurance claims were being delayed or denied despite clear policy coverage and proper death certificates. They're saying my husband's policy lapsed, but I have bank records showing we made every premium payment, explained grieving widow Dorothy to the customer service department. We never missed a payment in 15 years, and now they won't pay the death benefit our family desperately needs. Stephen decided to investigate these troubling claim delays that seemed inconsistent with company policy records and payment history documentation. What he discovered was life insurance fraud that devastated families during their most vulnerable moments. Michelle had been manipulating policy records to create false grounds for denying death benefit claims while diverting portions of those benefits into accounts she controlled through shell companies. She'd been backdating policy lapses, claiming premium payments were never received, and creating false documentation suggesting policyholders had violated terms that would void their coverage. The scheme was particularly cruel because it targeted grieving families who depended on life insurance benefits to pay funeral expenses, maintain their homes, and support children who had lost a parent. Michelle had been meeting company profit targets while families faced financial ruin during bereavement when they needed financial support most desperately. When investigators examined her policy administration, they found evidence Michelle had fraudulently denied or reduced over 100 death benefit claims worth nearly $6 million while families struggled with funeral debt and lost their homes due to lack of expected life insurance support. Our seventh story involves Mid-America workers' compensation, where case manager Gary had been handling workplace injury claims for 8 years. He consistently managed high caseloads while helping injured workers navigate medical treatment and disability benefits. Gary seemed knowledgeable about workers' rights and compensation procedures. Gary's case management helps injured workers get appropriate medical care while ensuring claims are handled efficiently, praised workers' compensation director Rebecca during a staff meeting. His experience with workplace injuries makes him valuable for both workers and employers. But injured workers started questioning why their medical treatments were being denied or delayed despite clear connections between their injuries and workplace accidents. They're saying my back injury isn't related to the lifting accident at work, explained frustrated warehouse worker James to his union representative. But I was fine before I hurt myself moving that heavy equipment, and now I can barely walk. Rebecca launched an investigation into claim decisions that seemed to ignore obvious connections between workplace incidents and resulting injuries that required ongoing medical treatment. What she discovered was workers' compensation fraud that denied injured workers the medical care and financial support they had earned through workplace contributions. Gary had been collaborating with company doctors to minimize injury severity and deny connections between workplace accidents and resulting medical conditions that required expensive treatment and long-term disability benefits. He'd been pressuring workers to return to jobs they couldn't safely perform, denying medical treatments that doctors recommended, and creating false documentation suggesting injuries occurred outside the workplace to avoid company liability. The scheme particularly harmed blue-collar workers whose injuries prevented them from earning income while they couldn't afford medical treatment without workers' compensation coverage. Gary had been meeting company cost reduction goals while injured workers faced financial ruin and untreated injuries that worsened without proper medical care. When investigators examined his case management, they found evidence Gary had inappropriately denied or reduced over 300 workers' compensation claims worth nearly $4 million while workers suffered permanent disabilities that proper treatment could have prevented. Our eighth story takes us to reliable home insurance, where underwriter Thomas had been evaluating insurance applications and setting policy premiums for 9 years. He consistently processed applications efficiently while maintaining company profitability through careful risk assessment and pricing decisions. Thomas seemed knowledgeable about insurance principles and risk evaluation. Thomas's underwriting expertise helps us provide competitive rates while managing our exposure to high-risk claims, announced underwriting manager Patricia during the annual review. His risk assessment skills are essential for our company's financial stability. But policyholders started discovering their coverage was significantly different from what Thomas had described when they purchased their policies, particularly when they needed to file claims for covered events. He told me flood damage was covered under my homeowner's policy, explained shocked homeowner Lisa after her basement flooded. But now they're saying I needed separate flood insurance that he never mentioned when I bought the policy. Patricia decided to investigate these coverage discrepancies that seemed to contradict standard policy language and underwriting practices that Thomas should have explained clearly. What she discovered was coverage deception fraud that left families without protection during disasters and emergencies. Thomas had been deliberately misrepresenting policy coverage to sell more expensive policies while knowing customers wouldn't receive the protection they believed they were purchasing. He'd been telling customers their policies covered risks that required separate coverage, omitting crucial exclusions that would deny claims, and creating false documentation suggesting comprehensive coverage when policies actually provided minimal protection. The scheme particularly harmed families who paid premium prices for insurance coverage believing they were protected from disasters, only to discover they had no coverage when they needed it most desperately. Thomas had been meeting sales targets for high-value policies while customers faced financial ruin from disasters their policies should have covered according to his sales presentations. When regulators investigated his underwriting practices, they found evidence Thomas had misrepresented coverage for over 800 policies worth nearly $12 million in false coverage promises while families lost their homes and savings due to disasters they thought were covered. Our ninth story involves TrustGuard Business Insurance, where claims specialist Rachel had been handling commercial property and liability claims for 7 years. She consistently processed business claims while maintaining relationships with commercial clients who depended on insurance protection for their operations. Rachel seemed professional and responsive to business owners' needs. Rachel understands the unique insurance needs of small businesses, praised commercial lines manager Kevin during her performance evaluation. Her claims handling helps businesses recover from losses and continue serving their customers. But business owners started questioning why their legitimate claims were being denied or significantly reduced despite clear policy coverage and documented losses that threatened their business survival. "They're only paying 20% of our fire damage claim," explained devastated restaurant owner Maria to her insurance agent. "The policy should cover rebuilding costs, but they're saying most of the damage was from delayed restoration rather than the actual fire." Kevin launched an investigation into claim decisions that seemed inconsistent with standard commercial property coverage and business interruption benefits that policies were designed to provide. What he discovered was commercial insurance fraud that destroyed small businesses and their employees' livelihoods. Rachel had been collaborating with preferred contractors to underestimate business property damage while splitting the difference between actual repair costs and reduced claim payments through kickback arrangements. She'd been denying business interruption claims by claiming losses weren't directly caused by covered events, reducing coverage for equipment and inventory that policies clearly covered, and creating false documentation suggesting business owners contributed to their own losses through negligence. The scheme particularly harmed family-owned businesses that couldn't afford to rebuild without proper insurance coverage, forcing them to close permanently and lay off employees who depended on those jobs. Rachel had been meeting company profitability targets while businesses failed and communities lost important services and employment opportunities. When investigators examined her commercial claims, they found evidence Rachel had fraudulently reduced business claims by over $15 million while accepting kickbacks worth nearly $200,000 from contractors who provided substandard repairs that left businesses unsafe and unable to operate properly. Our 10th story comes from Health First Medical Insurance, where authorization specialist Jennifer had been reviewing requests for medical procedures and treatments for 5 years. She consistently processed prior authorization requests while managing healthcare costs through careful review of medical necessity and treatment appropriateness. Jennifer seemed knowledgeable about medical procedures and insurance coverage guidelines. Jennifer's medical reviews help us ensure patients receive appropriate care while controlling unnecessary healthcare expenses, praised Medical Management Director Dr. Susan during a department meeting. Her understanding of medical guidelines helps us make sound coverage decisions. But doctors started questioning why their patients' standard medical treatments were being denied with explanations that contradicted established medical practice and treatment guidelines that insurance policies claimed to follow. They denied an MRI for my patient with severe headaches and neurological symptoms, explained frustrated physician Dr. Robert to the Insurance Appeals Department. This is standard diagnostic testing that every neurological guideline recommends for these symptoms. Dr. Susan decided to investigate denial patterns that seemed inconsistent with evidence-based medical practice and coverage policies that should approve medically necessary diagnostic testing and treatments. What she discovered was medical authorization fraud that delayed critical health care and endangered patients' lives through inappropriate denial of necessary medical interventions. Jennifer had been systematically denying expensive diagnostic tests and treatments by misapplying medical guidelines and creating false medical justifications that ignored patients' actual symptoms and conditions. She'd been requiring unnecessary second opinions for routine procedures, delaying urgent treatments with excessive documentation requirements, and denying treatments by claiming they were experimental when they were actually standard medical care. The scheme particularly harmed patients with serious medical conditions who needed prompt diagnosis and treatment to prevent complications and permanent health damage. Jennifer had been meeting company cost control objectives while patients' conditions worsened during delays caused by inappropriate denials of necessary medical care. When medical authorities investigated her authorization practices, they found evidence Jennifer had inappropriately denied medically necessary treatments worth over $7 million while patients suffered complications, permanent disabilities, and death from delayed medical care that insurance policies should have covered. Our 11th story involves Secure Auto Insurance, where fraud investigator Mark had been examining suspicious accident claims for 6 years. He consistently identified fraudulent claims while protecting the company from false injury and property damage claims that inflated insurance costs. Mark seemed thorough and objective in his fraud detection work. Mark's investigations save our company millions of dollars by identifying fraudulent claims, announced Special Investigations Manager Carroll during the team meeting. His expertise in accident reconstruction and medical record analysis helps us avoid paying false claims. But legitimate accident victims started questioning why their valid claims were being investigated as potential fraud despite clear evidence of actual injuries and property damage from real accidents. They're claiming I staged my accident and faked my injuries, explained injured driver Robert to his attorney. But I have hospital records, police reports, and witness statements proving the other driver ran a red light and caused my back injury. Carroll decided to investigate these fraud allegations that seemed inconsistent with documented evidence and standard accident investigation procedures that should distinguish between legitimate and fraudulent claims. What she discovered was fraud investigation fraud that denied legitimate claims by falsely labeling real accidents as staged events. Mark had been fabricating fraud evidence to deny valid claims while collecting bonuses for high fraud detection rates that saved the company money on legitimate claim payouts. He'd been creating false accident reconstruction reports, misrepresenting medical records to suggest fake injuries, and pressuring witnesses to change their statements to support fraud allegations against honest accident victims. The scheme particularly harmed injured people who needed insurance coverage for medical treatment and vehicle repairs after accidents caused by other drivers' negligence. Mark had been meeting company fraud prevention targets while accident victims faced financial ruin from medical bills and vehicle damage that insurance should have covered. When investigators examined his fraud investigations, they found evidence Mark had falsely labeled over 200 legitimate claims as fraudulent while collecting bonuses worth nearly $80,000 for denying valid claims that left accident victims without necessary medical care and transportation. Our 12th story takes us to Family First Health Insurance, where customer service representative Lisa had been helping policyholders understand their benefits and resolve coverage issues for 8 years. She consistently handled high call volumes while maintaining customer satisfaction ratings through helpful and knowledgeable service. Lisa seemed genuinely concerned about helping families access their healthcare benefits. Lisa's customer service expertise helps our members navigate complex healthcare coverage, praised customer service manager David during her annual review. Her ability to explain benefits clearly helps families get the medical care they need. But policyholders started discovering their healthcare benefits were significantly different from what Lisa had explained when they called to verify coverage before receiving medical treatment. "She told me my daughter's surgery would be fully covered under our family plan," explained shocked mother Patricia after receiving a $15,000 medical bill. "But now they're saying it requires prior authorization that she never mentioned during our call." David launched an investigation into coverage explanations that seemed inconsistent with actual policy benefits and authorization requirements that should have been clearly communicated to members. What he discovered was customer service fraud that misled families into receiving expensive medical care without proper coverage verification. Lisa had been deliberately providing false coverage information to encourage families to proceed with medical treatments that wouldn't be covered, knowing they would face enormous medical bills after care was provided. She'd been telling members that treatments were covered without mentioning prior authorization requirements, deductibles, and network restrictions that would result in denied claims and balance billing from healthcare providers. The scheme particularly harmed families who trusted Lisa's coverage explanations and proceeded with medical care believing their insurance would protect them from financial hardship. Lisa had been meeting customer satisfaction goals by telling people what they wanted to hear while knowing they would face medical bankruptcy when their insurance denied coverage for treatments she had incorrectly indicated were covered. When regulators investigated her customer service practices, they found evidence Lisa had provided false coverage information that resulted in over $5 million in unexpected medical bills for families who had verified coverage before receiving necessary medical care. Our 13th story involves Guardian Property Insurance, where adjuster Michael had been investigating property damage claims and determining settlement amounts for 9 years. He consistently closed claims efficiently while maintaining company loss ratios through careful damage assessment and negotiation with policyholders. Michael seemed experienced and professional in his claim handling. Michael's claim investigations are thorough and help us provide fair settlements while protecting against inflated damage claims, announced Claims Director Janet during the quarterly meeting. His property damage expertise ensures we pay appropriate amounts for legitimate losses. But policyholders and contractors started questioning why Michael's damage assessments consistently undervalued property damage and excluded necessary repairs that were clearly related to covered losses. "He's saying the storm only damaged our roof shingles," explained frustrated homeowner James to his contractor. "But we can see water damage throughout the house, and the contractor says the roof structure needs major repairs that his estimate doesn't include." Janet decided to investigate assessment practices that seemed inconsistent with standard property damage evaluation and construction cost estimates that contractors provided for proper repairs. What she discovered was property assessment fraud that left families with inadequate funds for necessary repairs and ongoing property damage. Michael had been deliberately underestimating property damage by excluding related repairs, minimizing structural damage that required expensive restoration, and negotiating settlements that covered only cosmetic repairs rather than comprehensive restoration needed to prevent future damage. He'd been creating false technical reports suggesting damage was less severe than it actually was while collecting kickbacks from preferred contractors who would provide inadequate repairs for reduced settlement amounts. The scheme particularly harmed families whose homes suffered extensive damage that Michael's assessments didn't acknowledge, leaving them with insufficient funds for repairs that would make their homes safe and habitable. Michael had been meeting company cost control objectives while homeowners faced ongoing property damage, health hazards from untreated water damage, and declining property values from inadequate repairs. When investigators examined his property assessments, they found evidence Michael had undervalued property damage by over $8 million while accepting kickbacks worth nearly $150,000 from contractors who provided substandard repairs that left homes unsafe and subject to further damage. Our 14th story comes from Trust Life Insurance Company, where policy service representative Karen had been managing life insurance policy changes and beneficiary updates for 7 years. She consistently processed policy transactions while helping families maintain their life insurance coverage through changing circumstances. Karen seemed helpful and knowledgeable about policy provisions and beneficiary rights. Karen's policy service helps families keep their life insurance coverage current and ensures beneficiaries can access benefits when they're needed most, praised Policy Services Manager Robert during her performance review. Her attention to detail prevents coverage gaps that could leave families without protection. But families started discovering their policy changes hadn't been processed correctly, particularly when they tried to file death benefit claims after losing family members who had life insurance coverage. She confirmed that I updated my beneficiary information after my divorce, explained confused policyholder Susan to the claims department. But now they're saying my ex-husband is still the beneficiary and my children can't receive the death benefit I intended for them. Robert launched an investigation into policy processing that seemed inconsistent with change requests that customers had submitted and received confirmation for completing. What he discovered was policy manipulation fraud that diverted death benefits away from intended beneficiaries while enriching people who shouldn't have received life insurance proceeds. Karen had been deliberately failing to process beneficiary changes while confirming to policyholders that updates were complete, knowing that death benefits would go to previous beneficiaries rather than intended recipients. She'd been collaborating with former spouses and estranged family members to maintain their beneficiary status in exchange for sharing death benefit proceeds when policyholders died. The scheme particularly harmed children and current spouses who were supposed to receive life insurance benefits but discovered they had no legal claim to proceeds that went to people the policyholder had specifically intended to remove as beneficiaries. Karen had been collecting bribes from unintended beneficiaries while families faced financial hardship during bereavement when they expected life insurance support. When investigators examined her policy processing, they found evidence Karen had failed to process over 300 beneficiary changes while collecting bribes worth nearly $100,000 from people who received death benefits intended for other family members. Our 15th story involves comprehensive care health insurance, where Medical Director Dr. Rebecca had been overseeing treatment authorizations and medical policy decisions for 6 years. She consistently managed medical costs while ensuring patients received appropriate healthcare coverage according to evidence-based medical guidelines. Dr. Rebecca seemed knowledgeable about medical standards and insurance coverage principles. Dr. Rebecca's medical expertise helps us make sound coverage decisions that protect patient health while managing healthcare costs, announced Clinical Operations Director Dr. Michael during a medical staff meeting. Her understanding of medical evidence ensures we approve necessary treatments while avoiding unnecessary expenses. But treating physicians started questioning why their patients clearly indicated medical treatments were being denied with explanations that contradicted established medical research and treatment protocols. They denied cardiac surgery for my patient with severe coronary artery disease, explained cardiologist Dr. Patricia to the Medical Review Board. This is life-saving treatment that every cardiac guideline recommends, but they're claiming it's not medically necessary. Dr. Michael decided to investigate medical decisions that seemed inconsistent with evidence-based medical practice and coverage policies that should approve medically necessary treatments recommended by treating physicians. What he discovered was medical policy fraud that endangered patients' lives by inappropriately denying necessary medical care to reduce company healthcare expenses. Dr. Rebecca had been systematically overruling treating physicians' medical judgments by misapplying medical research and creating false medical justifications for denying expensive but necessary treatments that insurance policies clearly covered. She'd been requiring unnecessary consultations for standard treatments, denying procedures by claiming they were experimental when they were established medical care. and pressuring patients to accept less effective treatments that cost less but provided inferior medical outcomes. The scheme particularly harmed patients with serious medical conditions who needed prompt, appropriate treatment to prevent complications and permanent health damage from delayed or inadequate care. Dr. Rebecca had been meeting company cost reduction targets while patients suffered preventable complications, permanent disabilities, and death from medical treatments that should have been authorized according to medical standards. When medical authorities investigated her authorization decisions, they found evidence Dr. Rebecca had inappropriately denied medically necessary treatments worth over $12 million while patients suffered irreversible health consequences from delayed medical care that could have saved their lives and prevented permanent disabilities. Our 16th story takes us to Secure Home Insurance Company, where claims supervisor Angela had been overseeing residential property damage claims for 8 years. She consistently managed claim processing while training adjusters to handle property damage assessments and settlement negotiations. Angela seemed experienced and professional in her claims management. Angela's supervision ensures our adjusters provide thorough claim investigations while maintaining efficient processing times, praised claims manager Stephen during the departmental review. Her experience with property damage helps us resolve claims fairly while protecting company interests. But homeowners and public adjusters started questioning why claims supervised by Angela consistently resulted in lower settlement amounts and excluded obvious damage that required expensive repairs. Every claim her team handles seems to find reasons to reduce payouts, explained public adjuster Martin to the insurance commissioner. They're systematically undervaluing damage and excluding repairs that are clearly necessary and covered under standard homeowner policies. Stephen launched an investigation into claim practices that seemed inconsistent with standard property damage assessment and coverage interpretation that should result in fair settlements for legitimate losses. What he discovered was coordinated claims fraud that involved multiple adjusters working together to reduce settlement amounts while collecting kickbacks from preferred contractors. Angela had been training adjusters to minimize damage assessments, exclude necessary repairs from settlements, and pressure homeowners to accept inadequate payments that wouldn't cover proper restoration of their properties. She'd been coordinating with contractors who would provide low-cost repairs that didn't address underlying damage while splitting the difference between actual repair costs and reduced settlement amounts. The scheme particularly harmed families whose homes suffered significant damage that Angela's team systematically undervalued, leaving them with insufficient funds for repairs that would make their homes safe and habitable. Angela had been meeting company profitability objectives while homeowners faced ongoing property damage, health hazards, and declining property values from inadequate repairs that didn't address the full scope of covered damage. When investigators examined claims under her supervision, they found evidence her team had systematically undervalued property damage by over $20 million while she collected kickbacks worth nearly $300,000 from contractors who provided substandard repairs. Our 17th story involves Total Care Medical Insurance, where pharmacy benefits manager James had been overseeing prescription drug coverage and authorization for 9 years. He consistently managed prescription costs while helping patients access necessary medications covered under their health insurance plans. James seemed knowledgeable about pharmaceutical coverage and medication management. James's pharmacy management helps our members get necessary medications while controlling prescription drug costs, announced Pharmacy Director Dr. Carroll during the benefits meeting. His expertise in drug coverage helps patients afford the medications they need for chronic conditions. But patients and physicians started questioning why necessary prescription medications were being denied or restricted despite clear medical indications and policy coverage that should approve medically necessary drugs. They're denying insulin for my diabetic patient and requiring her to try older medications first, explained endocrinologist Dr. Lisa to the Pharmacy Appeals Department. This is a type 1 diabetic who needs modern insulin to prevent life-threatening complications. Dr. Carroll decided to investigate medication denials that seemed inconsistent with medical necessity and coverage policies that should approve medically appropriate prescription drugs recommended by treating physicians. What she discovered was pharmacy benefits fraud that endangered patients' health by inappropriately restricting access to necessary medications to reduce prescription drug expenses. James had been implementing unauthorized restrictions on covered medications by requiring patients to fail on cheaper, less effective drugs before approving medically appropriate treatments that doctors prescribed. He'd been denying specialty medications for serious conditions, requiring excessive prior authorizations that delayed treatment, and creating false medical justifications for restricting drugs that insurance policies clearly covered. The scheme particularly harmed patients with chronic conditions who needed specific medications to maintain their health and prevent serious complications from inadequately treated medical conditions. James had been meeting company cost reduction goals while patients suffered complications from delayed or inappropriate medication therapy that could have been prevented with proper prescription drug coverage. When regulatory authorities investigated his pharmacy management, they found evidence James had inappropriately restricted access to necessary medications worth over $6 million, while patients suffered preventable hospitalizations and complications from delayed prescription drug therapy. Our 18th story comes from Really Shield Auto Insurance, where accident reconstruction specialist Patricia had been investigating vehicle accident claims for 7 years. She consistently provided technical analysis of accident scenes while helping determine fault and liability for vehicle damage and injury claims. Patricia seemed professional and objective in her accident investigations. Patricia's accident reconstruction expertise helps us determine fault accurately while ensuring legitimate claims are paid appropriately, announced Claims Investigation Manager Robert during the technical review. Her engineering background provides reliable analysis of complex accident scenarios. But accident victims and their attorneys started questioning why Patricia's accident reconstructions consistently favored the insurance company's policyholders regardless of actual evidence and witness statements from accident scenes. She's claiming our client was at fault despite 3 witnesses saying the other driver ran a red light, explained personal injury attorney Michael to the claims department. Her accident report contradicts the police report and ignores clear evidence of the other driver's negligence. Robert launched an investigation into accident reconstruction practices that seemed inconsistent with standard engineering principles and objective evidence analysis that should determine fault based on physical evidence. What he discovered was accident reconstruction fraud that manipulated technical evidence to reduce claim liability while denying legitimate accident victims the compensation they deserved. Patricia had been falsifying accident reconstruction reports by manipulating physical evidence, misrepresenting vehicle damage patterns, and creating false technical analyses that contradicted actual accident dynamics to protect company policyholders from fault determination. She'd been ignoring witness statements, altering accident scene measurements, and creating false computer simulations that supported predetermined conclusions rather than objective accident analysis. The scheme particularly harmed innocent accident victims who suffered injuries and property damage from accidents caused by company policyholders but couldn't recover compensation due to fraudulent accident reconstruction that assigned fault incorrectly. Patricia had been meeting company liability reduction targets while accident victims faced financial ruin from medical bills and vehicle damage that should have been covered by the at-fault driver's insurance. When engineering authorities investigated her accident reconstructions, they found evidence Patricia had falsified technical evidence in over 400 accident cases while helping the company avoid liability worth nearly $18 million in legitimate claims. Our 19th story involves Benefit Guard Disability Insurance, where vocational rehabilitation specialist David had been evaluating disability claimants' ability to return to work for 8 years. He consistently assessed claimants' functional capacity while helping determine appropriate disability benefits and return-to-work plans. David seemed knowledgeable about vocational assessment and disability evaluation. David's vocational assessments help us determine when disabled workers can return to employment while ensuring legitimate disability benefits are provided appropriately, praised Disability Services Manager Linda during the case review meeting. His expertise in job analysis helps distinguish between legitimate disability and exaggerated limitations. But disabled workers and their physicians started questioning why David's assessments consistently concluded that severely disabled people could perform jobs that their medical conditions clearly prevented them from completing safely. He's saying my client with severe rheumatoid arthritis can work as a data entry clerk, explained disability attorney Susan to the appeals board. But her hands are so swollen and painful, she can't even button her clothes or hold a coffee cup. Linda decided to investigate vocational assessments that seemed inconsistent with medical evidence and functional limitations that should prevent disabled workers from performing substantial gainful activity. What she discovered was vocational assessment fraud that denied disability benefits to legitimately disabled workers who couldn't perform any meaningful employment. David had been creating false job analyses that ignored medical restrictions and fabricating employment opportunities that didn't exist or wouldn't accommodate claimants' documented disabilities. He'd been claiming disabled workers could perform sedentary jobs when their conditions prevented sitting, standing, or using their hands effectively for extended periods required by any employment. The scheme particularly harmed disabled workers who had paid premiums for years expecting coverage when illness or injury prevented them from earning income to support their families. David had been meeting company cost reduction goals while disabled workers faced financial ruin and homelessness when they couldn't work but were denied the disability benefits they had earned through premium payments. When vocational authorities investigated his assessments, they found evidence David had fraudulently denied disability benefits to over 600 legitimately disabled workers while helping the company avoid benefit payments worth nearly $15 million. Our 20th story takes us to Protect Family Life Insurance, where underwriter Jennifer had been evaluating life insurance applications and setting premium rates for 10 years. She consistently processed applications efficiently while maintaining company profitability through careful risk assessment and appropriate pricing decisions. Jennifer seemed experienced and thorough in her underwriting evaluations. Jennifer's underwriting expertise helps us provide competitive life insurance rates while managing our exposure to high-risk policies, announced Underwriting Director Mark during the annual review. Her risk assessment skills ensure we maintain profitable policies while serving our customers' life insurance needs. But policyholders started discovering their life insurance premiums were significantly higher than what Jennifer had quoted during the application process, particularly after their policies were already in force. She quoted me a monthly premium of $85 for my term life policy, explained confused policyholder Robert to customer service. But now they're billing me $160 per month and saying that was always the correct rate. Mark launched an investigation into premium pricing that seemed inconsistent with underwriting guidelines and rate quotations that should match actual policy billing amounts. What he discovered was premium manipulation fraud that trapped customers in unaffordable life insurance policies through deceptive pricing practices. Jennifer had been deliberately providing false premium quotes to win new business while submitting higher actual premiums to the billing system after policies were issued and customers felt committed to maintaining coverage. She'd been targeting customers who shopped carefully for affordable life insurance but trusted her expertise to provide accurate pricing information for their family protection needs. The scheme particularly harmed families who budgeted carefully for life insurance protection but discovered they couldn't afford the actual premiums without sacrificing other essential expenses. Jennifer had been meeting sales targets for high-value policies while customers faced financial hardship from unexpected premium increases that threatened their ability to maintain life insurance coverage their families needed. When regulators investigated her underwriting practices, they found evidence Jennifer had overcharged customers by nearly $4 million in fraudulent premium increases while earning bonuses for policies that should have been canceled for deceptive pricing practices. Our 21st story involves Trust Medical Health Insurance, where utilization management nurse Carol had been reviewing hospital admissions and treatment authorizations for 9 years. She consistently managed medical costs while ensuring patients received appropriate hospital care according to medical necessity guidelines. Carol seemed knowledgeable about nursing standards and hospital utilization review. Carol's clinical expertise helps us ensure patients receive necessary hospital care while preventing unnecessary admissions that increase healthcare costs, praised Medical Management Director Dr. Patricia during the nursing review meeting. Her understanding of medical protocols helps us make appropriate coverage decisions for hospital services. But physicians and hospital case managers started questioning why Carol's reviews consistently denied or shortened hospital stays for patients who clearly needed continued inpatient care for serious medical conditions. She's forcing discharge for my post-surgical patient who developed complications, explained surgeon Dr. Michael to the Insurance Appeals Department. This patient needs continued hospital monitoring and can't safely go home yet. Dr. Patricia decided to investigate utilization decisions that seemed inconsistent with standard medical practice and patient safety requirements that should guide hospital length of stay determinations. What she discovered was hospital utilization fraud that endangered patients' lives by inappropriately denying necessary inpatient care to reduce hospital expenses. Carol had been systematically pressuring early hospital discharge regardless of patients' medical stability and safety requirements for continued inpatient monitoring and treatment. She'd been denying medically necessary hospital admissions, forcing discharge of unstable patients who needed continued care, and creating false medical justifications for limiting hospital stays that doctors recommended for patient safety. The scheme particularly harmed patients with serious medical conditions who needed extended hospital care but were forced into unsafe early discharge that resulted in complications and readmissions. Carol had been meeting company cost reduction targets while patients suffered preventable complications from inadequate hospital care and unsafe discharge planning that ignored medical necessity. When medical authorities investigated her utilization management, they found evidence Carol had inappropriately denied hospital care worth over $8 million while patients suffered complications and death from premature discharge that violated medical standards of care. Our 22nd story comes from Safe Driver Auto Insurance, where claims representative Lisa had been processing vehicle accident claims and coordinating repairs for 6 years. She consistently handled claims efficiently while managing repair costs through relationships with preferred automotive repair shops. Lisa seemed helpful and knowledgeable about vehicle repairs and insurance coverage. Lisa's claims handling helps our customers get their vehicles repaired quickly while managing repair costs through our network of approved shops, announced claims manager Kevin during the team meeting. Her coordination with repair facilities ensures customers receive quality repairs at reasonable costs. But customers started questioning why their vehicle repairs seemed incomplete and why repair shops were pressuring them to accept substandard work that didn't properly fix accident damage. The repair shop says my car is fixed, but the paint doesn't match and the door still doesn't align properly, explained frustrated customer Maria to the claims department. They're telling me that's the best they can do with the insurance money, but my car looks worse than before the repair. Kevin launched an investigation into repair quality that seemed inconsistent with company standards and customer satisfaction requirements that should ensure proper vehicle restoration. What he discovered was auto repair fraud that involved Lisa collaborating with preferred shops to provide inadequate repairs while splitting the difference between actual repair costs and insurance settlements. Lisa had been approving substandard repairs that used inferior parts, incomplete bodywork, and poor paint jobs while collecting kickbacks from shops that charged full insurance settlements but provided cheap, inadequate work. She'd been pressuring customers to accept poor quality repairs and threatening to reduce settlements if they complained about obvious defects in workmanship. The scheme particularly harmed customers whose vehicles retained permanent damage and reduced value from inadequate repairs that insurance should have covered properly. Lisa had been meeting company cost control objectives while customers faced ongoing vehicle problems and diminished resale value from repairs that didn't restore their cars to pre-accident condition. When investigators examined her claims handling, they found evidence Lisa had approved substandard repairs worth over $5 million while collecting kickbacks of nearly $100,000 from shops that provided inadequate work. Our 23rd story involves Complete Care Health Insurance, where prior authorization specialist Michael had been reviewing medical procedure requests for 7 years. He consistently processed authorization requests while managing healthcare costs through careful evaluation of medical necessity and treatment appropriateness. Michael seemed knowledgeable about medical procedures and insurance coverage guidelines. Michael's authorization reviews help ensure patients receive medically necessary procedures while controlling healthcare costs through appropriate utilization management, praised Medical Operations Director Dr. Susan during the authorization meeting. His clinical knowledge helps us approve appropriate treatments while avoiding unnecessary medical expenses. But physicians started questioning why their patients' routine medical procedures were being denied or delayed with explanations that contradicted standard medical practice and insurance coverage policies. They denied a colonoscopy for my 55-year-old patient with family history of colon cancer, explained gastroenterologist Dr. Robert to the appeals department. This is standard preventive screening that insurance policies are required to cover without authorization requirements. Dr. Susan decided to investigate authorization practices that seemed inconsistent with preventive care requirements and coverage mandates that should approve routine medical screenings and procedures. What she discovered was medical authorization fraud that delayed essential health care by inappropriately denying routine medical procedures that insurance policies clearly covered. Michael had been creating unnecessary authorization barriers for standard medical procedures, requiring excessive documentation for routine care, and denying procedures by misapplying medical guidelines that should support appropriate treatment authorization. He'd been particularly targeting expensive diagnostic procedures and preventive screenings that detected serious medical conditions early when treatment was most effective and least costly. The scheme particularly harmed patients who needed prompt medical procedures to diagnose and treat conditions that became more serious and expensive when delayed by inappropriate authorization denials. Michael had been meeting company cost reduction goals while patients suffered complications from delayed medical care that could have prevented serious health problems with timely diagnosis and treatment. When medical authorities investigated his authorization practices, they found evidence Michael had inappropriately delayed or denied medically necessary procedures worth over $9 million, while patients suffered preventable complications from delayed health care. Our 24th story takes us to Family Protect Insurance Company, where fraud investigator Rachel had been examining suspicious claims for potential insurance fraud for 8 years. She consistently identified questionable claims while protecting the company from fraudulent payouts that increased costs for honest policyholders. Rachel seemed thorough and analytical in her fraud detection work. Rachel's fraud investigations protect our company and honest customers from fraudulent claims that drive up insurance costs for everyone, announced Special Investigations Director Martin during the fraud prevention meeting. Her expertise in claim analysis helps us identify patterns that indicate potential fraud. But legitimate claimants started questioning why their honest claims were being investigated as potential fraud despite clear evidence of actual losses and proper documentation. "They're treating my house fire like I committed arson," explained devastated homeowner Thomas to his attorney. "I lost everything in an electrical fire, but they're investigating me like a criminal instead of helping me rebuild my life." Martin decided to investigate fraud allegations that seemed inconsistent with documented evidence and standard fraud indicators that should distinguish between legitimate and fraudulent claims. What he discovered was fraud investigation abuse that falsely accused honest policyholders of fraud to deny legitimate claims and avoid paying valid settlements. Rachel had been fabricating fraud evidence against honest claimants while collecting bonuses for high fraud detection rates that saved the company money on legitimate claim payouts. She'd been misrepresenting evidence, pressuring witnesses to change statements, and creating false documentation suggesting fraud when claimants had clearly suffered actual losses covered by their insurance policies. The scheme particularly harmed honest families who suffered real losses but faced accusations of fraud that prevented them from receiving insurance coverage they had paid for and desperately needed. Rachel had been meeting company fraud prevention targets while honest policyholders faced financial ruin from real losses that insurance should have covered according to their policy terms. When investigators examined her fraud investigations, they found evidence Rachel had falsely accused over 300 honest claimants of fraud while helping the company avoid legitimate claim payments worth nearly $25 million. Our 25th story involves Total Security Property Insurance, where catastrophe claims manager Stephen had been coordinating large-scale disaster response for major storms and natural disasters for 10 years. He consistently managed catastrophe claims while coordinating resources for widespread property damage from hurricanes, tornadoes, and other natural disasters. Stephen seemed experienced and organized in disaster response coordination. Stephen's catastrophe management helps us respond effectively to major disasters while ensuring customers receive prompt assistance during their most difficult times, announced Catastrophe Operations Director Janet during the disaster preparedness meeting. His coordination expertise helps us process thousands of claims efficiently after major storms. But disaster victims started questioning why their catastrophe claims were being processed differently from standard claims, with lower settlements and more restrictive coverage interpretations during their most vulnerable moments. "They're saying wind damage isn't covered because it might have been flood damage," explained hurricane victim Patricia to her public adjuster. "But my policy covers wind damage and the storm surge never reached my house." Janet launched an investigation into catastrophe claim handling that seemed inconsistent with standard coverage interpretation and disaster response protocols that should provide maximum coverage assistance during declared emergencies. What she discovered was catastrophe claims fraud that exploited disaster victims when they were most vulnerable and needed insurance protection most desperately. Stephen had been implementing special restrictions during disasters that weren't applied to normal claims, denying coverage by claiming disaster damage was caused by excluded perils, and pressuring disaster victims to accept inadequate settlements when they had no alternatives for rebuilding their lives. He'd been coordinating with preferred contractors to provide cheap repairs that didn't address the full scope of disaster damage while collecting kickbacks from reduced settlement amounts. The scheme particularly harmed disaster victims who lost their homes and possessions but couldn't afford to rebuild without proper insurance coverage they had purchased specifically for disaster protection. Stephen had been meeting company cost control objectives during disasters while victims faced permanent displacement and financial ruin from disasters their insurance should have covered. When disaster response authorities investigated his catastrophe management, they found evidence Stephen had systematically undervalued disaster claims by over $40 million while accepting kickbacks worth nearly $400,000 from contractors who provided inadequate disaster recovery services. Our 26th story comes from Health Shield Medical Insurance, where clinical reviewer Dr. Amanda had been evaluating mental health treatment authorizations for 9 years. She consistently managed mental health costs while ensuring patients received appropriate psychiatric and psychological care according to clinical guidelines. Dr. Amanda seemed knowledgeable about mental health treatment and insurance coverage requirements. Dr. Amanda's clinical expertise helps us ensure patients receive necessary mental health treatment while managing costs through appropriate utilization review, praised Behavioral Health Director Dr. Karen during the clinical meeting. Her understanding of psychiatric care helps us make sound coverage decisions for mental health services. But mental health providers started questioning why their patients' clearly necessary mental health treatments were being denied or restricted despite obvious clinical need and established treatment protocols. They denied inpatient psychiatric treatment for my suicidal patient, explained psychiatrist Dr. Lisa to the Mental Health Appeals Board. This patient needs immediate hospitalization for safety, but they're claiming outpatient therapy is sufficient for someone who attempted suicide yesterday. Dr. Karen decided to investigate mental health authorizations that seemed inconsistent with patient safety requirements and clinical standards that should prioritize mental health treatment during psychiatric emergencies. What she discovered was mental health authorization fraud that endangered patients' lives by inappropriately denying necessary psychiatric care to reduce mental health treatment expenses. Dr. Amanda had been systematically denying inpatient psychiatric treatment for patients who needed hospital-level care for safety, restricting therapy sessions below clinical recommendations, and forcing patients to accept less intensive treatment that didn't address their serious mental health conditions. She'd been misapplying clinical guidelines to deny treatment, ignoring suicide risk assessments that indicated need for intensive care, and creating false clinical justifications for restricting mental health services that insurance policies clearly covered. The scheme particularly harmed patients with serious mental illness who needed intensive treatment, but were denied appropriate care that could prevent suicide and psychiatric deterioration. Dr. Amanda had been meeting company cost reduction targets while patients suffered psychiatric crises from inadequate mental health treatment that should have been authorized according to clinical necessity. When mental health authorities investigated her authorization practices, they found evidence Dr. Amanda had inappropriately denied mental health treatment worth over $11 million, while patients suffered preventable psychiatric hospitalizations and suicide attempts from delayed or inadequate mental health care. Our 27th story involves Secure Family Life Insurance, where claims examiner Robert had been processing death benefit claims and investigating policy compliance for 12 years. He consistently managed death benefit payouts while ensuring policies were valid and beneficiaries were entitled to receive life insurance proceeds. Robert seemed thorough and professional in his claims investigation. Robert's claims expertise ensures legitimate beneficiaries receive death benefits promptly while protecting against fraudulent claims, announced Life Claims Director Maria during the claims review meeting. His investigation skills help us verify policy compliance while providing compassionate service during families' difficult times. But beneficiaries started questioning why their legitimate death benefit claims were being delayed or denied despite clear policy coverage and proper death documentation. They're saying my mother's policy was invalid because she didn't disclose a medical condition, explained grieving daughter Linda to the claims appeals department. But she answered all medical questions honestly on her application 5 years ago and never had any health problems until the cancer diagnosis last year. Maria launched an investigation into claim denials that seemed inconsistent with policy underwriting and medical disclosure requirements that should have been identified during the application process if they actually existed. What she discovered was death benefit fraud that denied legitimate claims by fabricating policy violations and medical non-disclosure issues that didn't exist when policies were originally issued. Robert had been creating false grounds for denying death benefits while collecting portions of those benefits through shell companies and kickback arrangements with unscrupulous attorneys who helped contest legitimate claims. He'd been claiming policyholders failed to disclose medical conditions that weren't diagnosed until after policies were issued, fabricating application discrepancies that didn't exist in original underwriting files, and pressuring beneficiaries to accept reduced settlements rather than pursue full death benefits. The scheme particularly harmed grieving families who depended on life insurance benefits to pay funeral expenses and maintain financial stability after losing their primary income earner. Robert had been meeting company profit targets while families faced financial hardship during bereavement when they needed life insurance support most desperately. When investigators examined his claims processing, they found evidence Robert had fraudulently denied or reduced over 200 death benefit claims worth nearly $18 million while collecting kickbacks worth over $300,000 from schemes that diverted life insurance proceeds away from legitimate beneficiaries. Our 28th story takes us to Reliable Auto Insurance Company, where subrogation specialist Patricia had been recovering claim payments from at-fault parties and their insurance companies for 11 years. She consistently recovered claim costs while protecting the company's financial interests through effective subrogation and reimbursement collection. Patricia seemed knowledgeable about subrogation law and recovery procedures. Patricia's subrogation expertise helps us recover millions of dollars from at-fault parties while ensuring our customers aren't penalized for accidents they didn't cause, announced subrogation manager David during the recovery meeting. Her legal knowledge helps us maximize recovery while protecting our policyholders' interests. But customers started questioning why their deductibles weren't being refunded despite successful subrogation recovery from at-fault parties who had caused their accidents. They recovered the full claim amount from the other driver's insurance, explained confused customer Michael to customer service. But they're keeping my $500 deductible instead of refunding it like they promised when I filed my claim. David decided to investigate deductible recovery practices that seemed inconsistent with subrogation procedures and customer promises that should result in deductible refunds when fault recovery was successful. What he discovered was subrogation fraud that involved keeping customers' deductibles even after successful recovery from at-fault parties who should have reimbursed all claim costs, including deductibles. Patricia had been successfully recovering full claim amounts from at-fault parties while maintaining false records suggesting partial recovery that justified keeping customers' deductibles as company profit. She'd been creating false settlement documentation and misrepresenting recovery amounts to customers, while collecting full reimbursement from responsible parties who had paid complete claim costs, including deductibles. The scheme particularly harmed customers who had paid deductibles for accidents they didn't cause, but never received promised refunds when the company successfully recovered all costs from at-fault parties. Patricia had been meeting company profit objectives while customers lost deductible money they were entitled to receive back after successful subrogation recovery proved they weren't responsible for accident costs. When legal authorities investigated her subrogation practices, they found evidence Patricia had fraudulently retained customer deductibles worth over $3 million while achieving full recovery from at-fault parties who had reimbursed those same deductible amounts. Our 29th story involves Guardian Care Health Insurance, where network administrator Lisa had been managing provider networks and negotiating medical service contracts for 8 years. She consistently managed healthcare costs while maintaining provider networks that served policyholders' medical needs. Lisa seemed knowledgeable about healthcare contracting and provider relations. Lisa's network management helps us maintain quality healthcare providers while controlling costs through effective contract negotiation, announced Network Operations Director Dr. Robert during the provider meeting. Her expertise in healthcare contracting ensures our members have access to quality medical care at reasonable costs. But patients started discovering their trusted physicians were no longer in their insurance network despite Lisa's assurances that their doctors would continue accepting their insurance coverage. She told me my cardiologist would remain in-network when I renewed my policy, explained heart patient Dorothy to customer service. But now they're saying he's out of network and I have to pay thousands of dollars out of pocket for my ongoing cardiac care. Dr. Robert launched an investigation into network communications that seemed inconsistent with actual provider contracts and network status that should have been accurately reported to patients making coverage decisions. What he discovered was network fraud that misled patients about provider participation while knowing their doctors wouldn't accept their insurance when they needed medical care. Lisa had been deliberately providing false network information to encourage policy renewals while knowing providers would be removed from networks, forcing patients to pay higher out-of-network costs or find new doctors during ongoing medical treatment. She'd been terminating provider contracts while assuring patients their doctors remained in-network, creating false provider directories that listed terminated physicians, and collecting bonuses for reducing network costs through provider elimination that wasn't disclosed to affected patients. The scheme particularly harmed patients with chronic conditions who needed ongoing care from specialists who were secretly removed from networks after patients committed to insurance plans. Lisa had been meeting company cost reduction goals while patients faced treatment disruption and financial hardship from unexpected out-of-network costs for medical care they couldn't afford. When regulatory authorities investigated her network management, they found evidence Lisa had misrepresented network participation that affected over 8,000 patients while helping the company reduce provider costs by nearly $6 million through undisclosed network changes. Our 30th story comes from Trust Shield Property Insurance, where quality assurance manager Jennifer had been overseeing claims processing and ensuring proper settlement procedures for 9 years. She consistently monitored claims quality while maintaining company standards for claim investigation and settlement accuracy. Jennifer seemed professional and detail-oriented in her quality oversight responsibilities. Jennifer's quality assurance helps ensure our claims are handled properly while maintaining customer satisfaction and regulatory compliance, announced Claims Operations Director Mark during the quality review meeting. Her oversight expertise helps us identify problems before they affect customer service or regulatory standing. But internal auditors started questioning why quality assurance reviews consistently approved questionable claim decisions that seemed to violate standard insurance practices and regulatory requirements. The quality reviews are approving claim denials that clearly violate state insurance regulations, explained concerned auditor Susan to the compliance department. These decisions should have been flagged for correction, but they're being approved as meeting company standards. Mark decided to investigate quality assurance practices that seemed inconsistent with regulatory compliance and industry standards that should identify and correct improper claim handling. What he discovered was quality assurance fraud that involved approving improper claim practices while hiding violations from regulatory oversight and executive management. Jennifer had been deliberately approving questionable claim decisions that violated regulations while creating false quality reports that concealed widespread claim handling problems from state insurance regulators and company executives. She'd been coordinating with claims staff to hide improper denials, approving settlements that violated coverage requirements, and maintaining false documentation suggesting compliance when claims practices actually violated numerous regulatory standards. The scheme particularly harmed policyholders who suffered from improper claim handling that should have been corrected through quality assurance oversight designed to protect consumer rights. Jennifer had been meeting company cost control objectives while helping systematic claim violations continue without detection by regulators who relied on quality assurance reports to monitor compliance. When regulatory investigators examined her quality oversight, they found evidence Jennifer had approved improper claim practices affecting over 5,000 claims while helping the company avoid regulatory penalties for widespread violations that cost policyholders nearly $30 million in improperly denied or reduced claim settlements. Our 31st story involves Lifeguard Insurance Company, where customer retention specialist Michael had been managing policy cancellations and helping customers maintain their insurance coverage for 10 years. He consistently managed retention rates while helping customers understand their coverage options during financial difficulties. Michael seemed helpful and understanding about customers' insurance needs. Michael's retention expertise helps customers maintain insurance coverage during difficult times while ensuring they understand their policy options, praised Customer Service Director Carol during the retention meeting. His knowledge of coverage alternatives helps families keep insurance protection when they need it most. But customers started discovering their insurance policies had been canceled despite making payments and receiving confirmation that their coverage would continue. He assured me my policy would remain active if I made the partial payment, explained confused customer James to the claims department when his house fire claim was denied. But now they're saying my policy was canceled 2 months ago and I have no coverage for my fire damage. Carol launched an investigation into retention practices that seemed inconsistent with payment arrangements and coverage continuation agreements that should have maintained customers' insurance protection. What she discovered was policy cancellation fraud that deliberately canceled customers' policies while assuring them coverage would continue. Michael had been canceling policies to meet company profit targets while telling customers their coverage remained active, knowing they would discover cancellations only when they needed to file claims for covered losses. He'd been accepting partial payments while secretly processing cancellations, providing false coverage confirmations while policies were already terminated, and collecting retention bonuses for keeping customers who actually had no insurance coverage. The scheme particularly harmed families who believed they maintained insurance protection but discovered they had no coverage when disaster struck, and they needed insurance benefits most desperately. Michael had been meeting company profitability objectives while customers faced financial ruin from losses their canceled policies should have covered according to retention agreements. When investigators examined his retention practices, they found evidence Michael had fraudulently canceled over 1,200 policies while assuring customers they maintained coverage, resulting in denied claims worth nearly $22 million for losses that should have been covered. Our 30-second story takes us to comprehensive auto insurance, where total loss specialist David had been evaluating vehicle damage and determining when vehicles should be declared total losses for 7 years. He consistently managed total loss decisions while protecting company interests through careful vehicle valuation and salvage recovery. David seemed knowledgeable about automotive valuation and total loss procedures. David's total loss expertise helps us make appropriate decisions about vehicle repairs versus replacement while ensuring customers receive fair settlements, announced Auto Claims Director Linda during the valuation meeting. His automotive knowledge helps us balance repair costs with vehicle values to make sound financial decisions. But customers started questioning why their vehicles were being declared total losses when repair estimates seemed reasonable compared to vehicle values that should support repair rather than replacement. "They're totaling my car for $8,000 in damage when it's worth $15,000, explained frustrated customer Robert to his insurance agent. "The repair shop says it's completely fixable, but they want to send it to salvage and give me a settlement that won't buy a comparable replacement vehicle." Linda decided to investigate total loss decisions that seemed inconsistent with standard valuation procedures and repair cost analysis that should determine whether vehicles could be economically repaired. What she discovered was total loss fraud that involved declaring reparable vehicles as total losses while collecting salvage recovery that exceeded repair costs. David had been collaborating with salvage yards to declare vehicles total losses when they could be profitably repaired and resold while providing customers with settlements below actual vehicle values. He'd been manipulating repair estimates to justify total loss declarations, undervaluing vehicles to make total loss settlements appear reasonable, and collecting kickbacks from salvage operations that profited from reparable vehicles obtained through fraudulent total loss declarations. The scheme particularly harmed customers who received inadequate settlements that couldn't replace their vehicles while their reparable cars were sold for profit through salvage arrangements. David had been meeting company cost control objectives while customers faced transportation hardship from inadequate settlements that didn't provide replacement vehicles of comparable value. When investigators examined his total loss practices, they found evidence David had fraudulently declared over 800 vehicles as total losses while collecting kickbacks worth nearly $200,000 from salvage operations that profited from reparable vehicles. Our 33rd story brings us to Ultimate Care Insurance Group, where Executive Vice President Angela had been overseeing multiple insurance divisions and fraud prevention programs for 15 years. She seemed like the perfect insurance executive, managing everything from claims operations to customer service with apparent expertise and industry recognition. Angela has transformed our company into an industry leader in customer service and fraud prevention, praised CEO Patricia during the annual shareholders meeting. Her leadership has improved our efficiency ratings while maintaining strong profitability across all insurance lines. But a coordinated investigation by multiple state insurance commissioners revealed that Angela had been orchestrating comprehensive fraud schemes across every insurance division while maintaining an elaborate facade of industry leadership and customer service excellence. Examination of all divisions simultaneously uncovered the most extensive insurance fraud operation in industry history. Angela had been implementing fraudulent practices in property claims, health authorizations, life insurance processing, auto damage assessment, and disability determinations while collecting kickbacks from contractors, medical providers, and service companies that participated in systematic customer exploitation. The investigation revealed Angela had stolen over $50 million through coordinated fraud schemes that affected tens of thousands of policyholders across all insurance lines while maintaining industry recognition for supposed customer service excellence. When federal authorities arrested Angela during an industry awards ceremony where she was receiving recognition for fraud prevention leadership, shocked industry colleagues couldn't believe the executive they'd respected had been deliberately exploiting every customer she was supposed to protect while destroying trust in insurance protection that families depended on for financial security. Thank you for joining me tonight on Drowsy Tales Daily. And may these stories guide you into peaceful sleep with renewed awareness of the importance of insurance accountability and protecting consumers from companies that would exploit their trust during vulnerable moments. Sweet dreams, and I'll see you tomorrow night for another collection of fascinating Reddit stories designed to help you drift off to sleep.